All right. Okay. So again, thank you so much for letting me be here today. I'm going to talk about 5 steps. I'm going to go over the complete trading strategy, everything that you will need to trade Fibonacci today. It's a great strategy because Fibonacci has been proven, mathematically proven. It's a mathematics sequence, and I'm not going to go into those details today because I don't want to bore you to death, but I just want you to understand that if you're trading and you're looking for a good strategy, that a Fibonacci strategy is a great strategy to go with. I find that when traders are getting started, that they often will jump from strategy to strategy because they don't have the traction that they need to see results, right? So they might find a moving average strategy, or just using that as a basic example, and it just doesn't work for them, right? And so they're in this quest to going from strategy to strategy to strategy, and they're never able to find results or the success that they're looking for. And that's one of the reasons why traders get burnt out so much. And so I just wanted to really emphasize that this is a great strategy. So if you're a new trader and you have not gone from strategy to strategy, or even if you're a veteran trader and you're still looking for that strategy, I know a lot of times when I'm doing training and things like that, I'll put out a question. And we got a good audience today, so would love to be able to ask the question: how many of you in here today have not been able to find a great strategy and are still looking for something that they could really call their own, that they could have confidence in, that they are ready? How many people really need a strategy? Okay. So yeah, I like this to be interactive. So everybody that's participating, that's really good. All right. Good. Good, good, good. All right. So a lot of people are saying that that's them. They really I think I got like 10 comments. So that's good. And that's really helpful to me to know that I'm talking to the right audience. So one of the things that cause people to not find a good strategy is because they really don't know how to work with one thing. I saw a comment the other day from a trader, and he was talking about business, and he said, it's a never-ending cycle if a business has to always launch something new rather than finding one thing and continually making it better each day. And so I want to try to emphasize that this is a good strategy, that Fibonacci is a great foundation to place your education. And it's great that you've came to the webinar today, right? It's a Fibonacci and Elliott wave trading, and you're hearing from a lot of experts. So you're really building out a solid foundation. And so today, that is a good foundation for you to build on. And try to focus on what you're doing right now. Focus on your trading rather than focusing too much on results, right? The process that you're going through to make this strategy great is going to take you further along than if you just focus on results. People start looking far ahead, and sometimes I'll be doing a training like this and I'll say traders have problems with this, or retail traders have this problem, or people do this. And when I say that, I'm really talking about myself. Like, I'm not pointing the finger at people that are out there that are having problems. I'm just saying, yeah, I have this issue. I'm always looking ahead, and I that's so funny. I got a Star Wars flashback in my mind, a Yoda flashback when he was talking to Luke, and he said, always thinking ahead and not focusing on where you are. And I find that when I talk to traders, I don't know if you guys get the voice of Yoda talking to you like I do, but they're always like, I want to make this money and I want to do this and I want to do that, but they're not focusing on what they are looking at. And they jump from strategy to strategy thinking that that's going to solve their problem when they have a perfect strategy right in their hand that they're not even willing to work with what they've got. You got to be willing to work with what you have and use it and make it great. And so I know everybody's in here, they want to learn the 5 tips and all that. And yes, I'm going to get to that. Right. But I want you to just say that you're in the right place at the right time, that this strategy of using fibs can absolutely change your life, right? It absolutely can change your financial picture, but you've got to be treating the market as a process of getting better every day, of working on yourself and working on the process, and not as a slot machine, right? Because again, I think about things when I do stuff. I go to the I go to the gas station and I want to get some cash out at the ATM machine, and I see a line of people lined up playing the the scratch off tickets. And now again, I'm not knocking anybody. I'm not like belittling anyone that is playing the scratch offs, but it's people that are trying to get out of a problem. They have a problem, a financial issue. They're feeling stress and strain financially, and yet they think that this little scratch off ticket is going to solve their financial problem, but it won't. I promise you that it's not going to solve your problem. The problem is that you don't know how to manage money properly. Every single person, and I'm not being critical, but every single person has been given a certain amount of money to manage. And you got to learn how to do that. And you might start looking at all the lack in your life and say, I don't have this and I don't have that. And Joe Blow down the street has a much better job than me. And those things may be true. But the truth is that you have something that you've got to be able to manage. You have a measure of money that you can manage, and yet you have not managed it well. You have not solved the financial problem that is in front of you. And the scratching off a scratch off ticket, if you win it big, you're just going to be broke down the road. And so going into trading thinking that you're going to jump from strategy to strategy, most people get into trading because they have a financial problem, just the same reason that they get into into gambling, right? And so for most traders, trading is gambling because they're trying to solve a financial problem, because there's pain there. And to really solve that problem, you've just got to get better with managing what you have. Okay, so I'm going to give you a strategy today, and I want you to go in with the mindset and that this is a good strategy, that you can make it work, but you actually have to do the work to make it work. You got to make yourself better. And I just was looking in the comment. I saw Hugh jump in. Hey, how you doing? It's been a while. Hugh was on my podcast. But yeah, you guys can do this, right? You can do this. You have everything that you need, but you've got to slow down and focus, okay? And so I'm going to go through 5 steps and I'm going to hammer them pretty hard. It's going to be very easy. It's going to be very easy. Okay. This is not complicated at all. I feel like we have to make things easy if we want to be successful. I really believe that. I think complexity is too hard to follow, especially for someone like me. I'm a simple man. So step number 1 for Fibonacci trading is to identify the trend. Okay. And so there's so many different ways to identify the trend in trading. You can use moving averages, a 50 or 200 period or 100 period moving averages are great for identifying the trend. You can use trend lines. You can use a combination of things. You can use support and resistance level. I do like to use trend lines. And so when I'm using a trend line for finding the trend, I will draw something like what you see on the chart, right? Very simple, very easy. However, once the market, so if I have a trend line like this, once the market then breaks above and then comes back and then retests, and see we have a support level right here, then I'm looking for a new trend, right? And, you know, it's not always crystal clear. It's not always a solid trend like this. Sometimes the market will be ranging or sideways markets, or it'll be uptrend 1 minute, downtrend the next minute. But the idea for me with identifying the trend is to find the absolute best trend that I can find and trade that. Now, some people will trade one instrument, and that's a really good way to do it. And other people will be searching for instruments to trade. But whether you're trading just one thing or you're trading multiple instruments, you still want to identify the trend and find the best trend. This is a S&P 500 on a 1 minute chart, right? And so any given day, you're going to find a really good trend. And, you know, the guy to ask on that would be Hugh, because he's the S&P expert, right? But any given day, you can find a really good trend on one instrument, especially something like the S&P 500, because it's got a ton of volume and it really moves, right? So right here, we have a very good trend on the S&P 500. And so that's the first thing that I am looking for when I'm trading with Fibonacci's. Now, the next thing, and it falls in the trend, is that I'm looking to trade on pullbacks within the direction of the trend, okay? And so if we take this particular chart, we are looking for short trades, right? And when we're doing that, we would be looking at drawing a fib on this particular move that we're looking at. So right here, we've got a nice strong trend down, but you're going to notice something. There's green bars in here. Okay. Lots of green bars. Not lots, but most of them aren't green, but there's definitely some green bars. Okay. And what you're going to notice on these is that these are all pullbacks. Okay. And these are times where you could use Fibonacci to make your trade. Now, I want you to forget for a minute that it says 1 minute chart. Okay, just totally forget that, because we could use this to find pullbacks and to find entries on Fibonacci trades on a 1 minute chart. You can use it on a daily chart. You can use it on a weekly chart. You can use it on whatever time frame you want. And, you know, I'm a guy that is pretty busy. Sometimes I do these webinars, and before I talk to people, I always are like, here's my resume. This is what I've been doing for the last 32 years, right? I got a lot of stuff on my resume, and it's not to impress people, but I will say that I'm a pretty busy guy. I've done a lot of stuff. And I say that to say that I like trading longer time frames so that I don't have to sit in front of the charts all day, right? So I like to find trends like this on a weekly chart and maybe take a trade once a week. Because why? Because that works just as well as if I'm using it on a 1 minute time frame, and I can do that. And I can trade on Friday when the weekly candle closes. I like that, right? So whatever time frame you're on, and I'm a little bit off track here, but I like to just unload. I kind of like these trainings for me to be like drinking out of a fire hose. I personally, my personality, and everybody's got a different personality. I'm coaching guys, you know, and one of the guys I'm coaching, he's very meticulous. He loves to take his time. He loves to do things slowly. And I'm like, man, I wish I could be more like you, because you're going to be great. But that's not me, right? When I'm in a training, I want to drink out of a fire hose. I want to go stick my head in and go all in. So I sometimes will veer off and just pour out all kinds of stuff. Anyways, yeah, pick the time frame. You know, think about these things a little bit. Sit down and write the notes down. Another thing that I always recommend to people is that people don't just let their lives get away from them and just kind of go through on autopilot. Think about things a little bit, right? Think about what type of trader you want to be. What times do you need to be trading? Are you working? You know, are you like your personality, like, are you major HDHD, which most of us are nowadays? So if you're on HDHD, maybe 1 minute charts are great for you, right? But try to find something that fits for your personality, for your current circumstances, for your current life. So I always trade in the direction of the trend, but I use a time frame that fits my personality, what fits for me. So with that being said, the next step here, let me delete my marks here, is once you identify the trend, you want to be able to find the pullbacks. And I think I might have written that on the slide. So let's see. Yeah. So we want to select key swing points. Okay. We want to select key swing points. And I want to show you what that means. So I left this slide blank. So hopefully you guys can see. Hopefully you guys can see my pen. Let me make it a little bigger. Can you guys see my pen? Let me know in the chat. Yes. Okay, perfect. So we want to collect key swing points. So let's reference back to that first slide, right? Where I showed the downtrend. So now we're just going to try to draw that from scratch. And I could go back and do it too, but I like to have a little canvas here. So we're going to say that this is a downtrend and it's pretty strong. Okay. But nothing moves in a straight line in the markets. Okay. So, right. So what we do is, this is how we trade fibs, right? And so we need to understand that it doesn't matter what time frame we're on. We could be trading weeklies, dailies, 1-minute charts, whatever. But what we do need to understand is that Fibonacci's are great for trading with the trend. Absolutely fantastic for it, right? And the reason why is because a lot of trend traders get in trouble. And I want to show you where you can get in trouble before I show you how to actually do your entries. Is a lot of trend traders or Fibonacci swing traders, whatever, they will get in at the breakout. And the problem with that is if it breaks this key level, we have a support level right here. The problem with this is that they get in when it breaks out and then the price immediately turns on them. Okay. And while it didn't turn that far, and if you held out, you'd be fine. But a lot of people, their stops are too tight. They get in on a breakout and they're not getting in at the perfect timing. So when you're working on a great Fibonacci strategy, and you might want to, oh no, I deleted all my stuff. Let's see, can I undo that? Yes. When you're working on a great Fibonacci strategy, remember this word. You might want to even write this in your notes if you're writing notes. And I will tell you, I'm not telling anyone to do anything, but the people that write notes, I just think are going to be more successful. I write notes all the time. I'm the guy that goes up to an event with a notebook and I fill it up. Right. Again, not that you want to be like me, but that's something for me that's worked really well in my life. It helps me absorb the information. I like to sit in the front. I like to sit on the edge of my seat, and I like to write a lot of notes. And I also like to ask a lot of questions. I'm the guy that's really annoying, that's asking a lot of questions. So if any of you are like that at all, timing is really important, because being able to have patience is critical, right? Patience is critical, because being able to have patience for the right timing is absolutely important, because you're not ever going to have good timing if you don't have patience to wait for the right time to enter the trade. So with trading, it's important to get in at the right time. Anybody can do technical analysis and Fibonacci analysis and tell us when to make a trade. Anybody can do that at all. It's not hard. I mean, it's like the weatherman, right? I always joke. I'm not a funny person at all, but I always joke. I said, weatherman and technical analyst in the markets are the only people that can be wrong all the time and still get paid, right? It's easy to say, oh, this is what the market's doing, and this is what the market's doing here. That's easy. Anybody can do that. But what's really hard to do, it could go up today, and the market actually now that I look at it from this angle, it actually could go down. Wait a second, the weather, it might rain or maybe it'll snow. I don't know, but it's going to do something, right? Becoming a great trader is learning how to do an analyst, analyzing the market, and then having the expert execution and control of self to be able to get in at the right time and have the patience to make it happen. Okay, so with that being said, we absolutely do not want FOMO at any times. One of the guys I was coaching today was like, hey, I had some FOMO. And he didn't use those words. He just said, I saw the trade getting away from me and I jumped in. And I'm glad I didn't get wrecked. And I'm like, I'm glad you didn't get wrecked, but next time, wait for the pullback, right? So that's the key word here. Wait for the pullback. Wait for the pullback, okay? Very important to wait for the pullback. So when we have a trend like this, what we're going to do is we're going to draw a Fibonacci, and we're going to draw it like this. And I'll get to the charts in a minute. But when you're going to draw it from swing high down here to swing low. And then the Fibonacci platform is going to draw some lines like this. Okay. And they're going to tell you when to get into the trade. So it's going to come back like this. And you're going to be like, okay, this is where I'm going to be patient for, right? I have the trend. I know the trend. I waited for the pullback. I waited for price to get to the right level before I enter my trade. Now, we're going to talk about trade entries here in a minute, and there's two primary ways to do it. And remember that. There's two primary ways to get into the trade, but the first thing that we're going to do is we're going to draw our levels and we're going to be patient. So once you get down, and another thing about drawing these, and I'm going to delete this now. When we have a key level, I'm just going to go with one level. Okay. When we have a key level, actually, let me do this one more time. The market is going down and you notice there's no pullback and you want to draw a fib. Okay. But what happens sometimes is you're like, oh, the market's at the bottom. I'm going to draw the fib here. Well, it didn't reverse. Oh, I'm going to draw the fib here. I'm going to draw the fib here. You have to wait for an actual market bottom before you can draw the fib. So you have to be patient and wait for that to reverse. So what we want to do is we want to find a bottoming pattern, right? So we want to look for a candlestick pattern. I'm not going to go into candlestick patterns too much because I do a ton of training on patterns. I love them. But you want to find a candle that looks like this, and then something that looks like that, right? And what you're doing here, and again, when I say if we go back to the very beginning that Fibonacci is a worthy strategy, I saw someone use the word worthy. It is a strategy that will work for you. It is a strategy that can make you money. It's a strategy you can live on. You still have to learn a lot of other things, and like key swing points, and also how to find support and resistance, how to trade off of support and resistance, and how to read candlestick patterns, right? Those are all really important. And so I feel like it's absolutely critical that I never, ever, ever do a training where I don't talk about those things. And so when we're identifying our key swing points, we want to make sure we have a pattern. And what's happening, again, it's great to understand what is going on behind the scenes with money coming into the markets, money coming out of the markets, with liquidity. But when you see a pattern like this, what you've got to understand here is that, you know, at one point, this candle was a screaming sell. Okay, and everybody's jumping in. They're like, the bottom's coming out, boys. Let's go in, right? And so everybody's jumping short. And that's where the FOMO kicks in, and all that money is flowing in. It's flowing in, flowing in. Well, then there's a hard reversal all of a sudden, and people start getting stopped out. Other people are coming in. The emotions of the situation start to change. And this pattern here takes out the bottom, and then it takes out that top. And you know that when people are looking at that candle and that top of the candle gets taken out, that, wow, a reversal's coming, right? And all of the money starts going the other way, and the picture's going to change. And so when you get a pattern like this, this is actually, and I don't have, let me change the color here. You know, it's red here, and then all of a sudden it turns green or blue here, right? So that's the reversal, okay? And so at that point, we have a bottom. But that doesn't mean the trend is changed. That doesn't mean that everybody needs to go long. It means that you're like, okay, I have my bottom, so now I can draw my fib. So you take your fib, you draw from swing high to swing low, and then you get your fib lines, okay? You're going to get your fib lines. And one of the other things you might notice about your fib lines is sometimes you're going to see it'll line up with a trend wall, right? So that's a great clue, okay? So if you're, and again, you guys can write some of this stuff down. If you are trading with fibs, you draw your fib and you get a trend wall in conjunction with, and it doesn't necessarily have to be a trend wall, it could be a moving average. If you like 50, 20, 40 period moving averages, whatever, right? If you get that in conjunction with a fib, that's called something. I forget what it's called. It's a confirmation point, convergence. It's just another data point. Look, all these candles are is it's price data. And in confluence, thanks, Steve. You call it whatever you want. I'm just trying to think of a funny name, but I can't. When you get multiple points of data that are pointing to the same thing, what does that do? Well, it helps build up the accuracy of the trade. Why? Because other traders are going to see it. Because we have some traders that are looking at fibs, some traders that are looking at moving averages, some traders that are looking at RSI, some traders that are looking at support and resistance, right? And so if we can build up a case, if we can build a case and get as many of those things as we want, then not as we want, but as many of those lining up in favor of our trade, the better it is, right? So I always like to find at least two things lining up, right? I'm like, I want a fib, I want a trend wall, and usually it's three, at least two, but I prefer three. And now that I'm getting a lot better at waiting for my setup, now that I'm not allowed to ever say the old word because I'm not ever going to call myself old, but now that I'm experienced, because I believe in my mind that I'm always going to be young. But now that I'm more mature and experienced with trading, I really like to have three things. And so what would that be? That would be fib. So I'm saying that this is today's Fibonacci mastery, but I'm never, ever, ever going to take a trade that's just based off of fib, right? So I need a trend, a really solid trend. I need confirmation and confluence, as my friend Steve reminded me, in order for me to take that trade. So I'd be looking for something like, so this would be, let's just say that this is the 38 level, which is a great level. I love the 38. The 0.38 in a strong trend, the 0.23 is a great level. Okay, but you got to catch that fast, right? You got to be willing to catch it really fast. But I like the 38 and the 50. Those are really good levels, okay? But we want to see a trend line, a moving average. We want to see a chart pattern, right? So what is beautiful is if we get price coming up, let's go back to blue, and we get another nice candle that comes up here. I mean, this is a great candle, and then it just crushes. Like I could short right away. I could short this immediately as soon as it happens, but you know what? It's got momentum and it's crushing, right? But then we get another candle that looks like this, almost to the 50, and then finally we get one and it shoots up, but it doesn't make it, and then we get this. And you can pay extra for the good drawing because I'm an artist. So we get the pin bar and the breakout the bottom. right? Now that is an extra confirmation. So what do we have here? We've got a nice trend in play. Okay. Rom said I did great drawing. So I get you know what, David, you don't have to chime in, but I will just say, if you're giving awards for the presentations, you can give me an award for the best drawings. Maybe we'll have to see how other people stack up. But anyways, I got sidetracked. Number one, I got one trend in line. I'm trading in the direction of the trend. Number two, I have what? A trend wall. We'll call it a TW, trend wall. And you know what? Just for fun, I know that there's a moving average there. I know that. Oh, and you know what? How on earth did this support level work out? You see that? Look at that. Oh my goodness. So now we have support. Okay. We got support. Wow. That's amazing. Okay. And then what else do we have? Number 5, right? We have a candlestick pattern. We have a beautiful, beautiful evening star candlestick pattern. And then the last but not least, right? Last but definitely not least, I ran out of room. And I think you guys, we're joking about the true Picasso. And you know, my thing about Picasso is I'm not an artist and I don't really understand art, but I would say that he would have a messy canvas. And so that's would fit me here. I do have a messy canvas. But last but not least, we have number 6, which is fibs. Okay. And so, yeah, this title is called The 5 Steps for Fibonacci Mastery. And we're on step number 2. But unfortunately, I've included 6 additional steps just on step 2. Now, when we get to step 3, I included an additional 15 steps. Actually, I'm joking about that. It's 5 steps. Each step has 32 steps. Just kidding. I'm just kidding. Guys, don't leave the webinar. It's a joke. I kid. No, but being totally serious, this stuff is important that you have these things lined up and just write it down in your plan, right? I feel like the people that are really focusing on what they're doing, I'll always like to give added homework, and not because I like work. I'm like those teachers are always loading you up, and I always was so mad. It's like, why are you doing this to me? But really, they're just trying to make you excel. If you want to excel, you're going to do what other people are not willing to do. So I'm going to be talking to people today, and I'm going to say, go back and look at your trades and how many steps, how many of these did you have in each one? And I could add a couple more. I could say RSI or whatever. I could say, how many of these were in your last trades? Would you go back and look at your last 5 trades and tell me, out of all these things, what did you have? And I put TW, that's trend wall, because I almost forgot what it was. Just do some work. Put the work in to become excellent at what you do. Okay, it's worth it, right? It's worth it because of the rewards that will come. But so many of us, and me included, because you know what? You know how I got started in trading? I got lucky. I started trading when I was a kid. I was just investing because my dad got me started. And when I was 19, I got into the market, and I was in the Army, and I put everything that I had into the market. Literally all my paychecks were going in, and I got really lucky. And by the time I got out of the Army, I did a 4-year term. I ended up going back, but that's a whole nother story. But I did a 4-year term, and I had over $30,000 in the market just because I was consistently putting money in, and that's I love to talk about that stuff too, because it's so important, right? It's about good money management. Always take a little bit off the top, and put in something today. Put in a little bit of money into some savings, into some investments. It will pay off big time. So anyways, what I'm saying is the reason I got involved was just like everybody else, is I needed money. I was always investing, but I didn't get involved into trading because I thought, you know what, this investing thing is working for me. Now, why don't I try to trade? and I needed some money. I was in a tight spot. I lost my job. You know, I was 4 kids. I needed some money. I saw an ad on TV. Right? It might have been on the internet about start trading. We'll give you $50 to fund an account. And I did that, and I immediately lost the money. Why? Because I was just focused on making money, and I wasn't focused on what I was doing. Okay, so take the time, go through and review your trades, review your trading plan, review your strategy. Do you know when you're going to get into a trade? Do you know when you're going to get out of a trade? Do you know how much money you're going to be risking? Write all of those things down. So with that being said, I'm going to go to the next slide, and I don't even remember what I put on it. Okay, so step number 3 is to apply the fib level. So let's go ahead and actually pull up a chart right now, and I'm going to show you how to do that. So this is the S&P 500, and I mean, this S&P 500 is a great chart, right? It's a great thing to trade. But I mean, there's so many good ones, but the S&P is really good. So you can see we got a lot of really, the reason I like it so much is because it has a lot of great trends. And, you know, I like to doodle and stuff. So I had put some key levels on my chart. But if we take a look, let's just go ahead and put in a fib, right? And we're going to just do one from here. We're just going to do one. Whoa, we're going to do a fib from here, from swing low, right? And we're going to go on the uptrend. And we're going to put it here on here. Okay. Now, what you're going to notice here is on this particular one, and this didn't even get to the 23. Right. And so when you have a strong trend, I had mentioned this earlier, when you have a strong trend, it might not hit the 23, or the 23 is a great level. Right here it says 23. And so we apply the level. So the way that you do that is you wait for pullback, and you want to make sure, let me zoom up. You want to make sure when you're putting your levels in, it's easy to find the top or the bottom. You just go here, and I didn't draw it down far enough. Okay, it's easy to find the top or the bottom, or the start of it. The hard part is knowing when the trend is over. So what I like to do is wait for a candlestick pattern. Like right here, we have a evening star, a bearish engulfing pattern. You see price came down. So at that point, I'd be like, okay, this is the top. Right here, we got a nice pattern. This is the top. And so at this point, we could put it in, but it didn't make it, right? And so what do you do in that situation? Well, you know, this is a really strong trend and it's already bouncing. Well, you just go in and try to find it on another time frame, right? You could easily do that, not to try to curve fit your trade so that it works for you, but just because the trend is just too strong and you really want to find trades within the trend. So we could actually go down. We could look at this probably on a 4-hour time frame, and I don't even know where it went right now because it was so far away, and find something really good. But so that's how we draw it. Let's go ahead though. Let's zoom out and let's keep drawing. Let's go from here to this one. Okay, now this one was a perfect 23. And that's the other thing is we can look back at support and resistance levels, which you can see there's a nice little level here. But this one was perfect. And this just happened in April of 2024. So this one is just this year. So we had a great move. And I'm sure many of you guys were trading during this period. I was making a lot of good revenue, just to be honest, on this move up, because I was buying and buying, and I was buying smaller pullbacks. I do like the weekly charts, but I still do trade on lower time frames as well. But I was buying on pullbacks all the way up, and you can apply these fibs all the time, right? And so right now, we're in a really interesting place here. Could we find a fib that happens here? So that's, again, this is step 3. We want to apply our fibs. So let's do another one. Let's do the most recent move. We got to move down, up. Where did we get to? Okay, where did we get to? Ooh. That's pretty interesting. The last move that we did on the S&P 500 from swing low, and where do we go? Swing high. We've got a lot of candlestick patterns, but we also had, I think that you just got to kind of analyze everything and just think, take some time thinking. We had what was this? This is one of my secrets, by the way, and it's not necessarily in the Fibonacci mastery strategy, but this is what you call consolidation. Because whatever happens in a market, whenever the markets are moving, there's a ton of money coming in, right from here, right? Money, 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 money. And at some point, the people are like, yo, we can't buy this anymore. we need to wait a little bit, right? And so that's when you get consolidation. It slows down, and you got all the excited people. It drops one day and they're like, nope, we're back on. So they're buying. Then they're like, no, we're selling, buying. And it just builds that consolidation, which gives the market a breather, and it begin accumulates money, right? Money's going in here, right? By long and short, lots of money is flowing in, and there's a balance is being created. It's like a big lottery golden ticket pool, right? Like, the lotto pool. Like, think about it. You got the lotto, and everybody, what does everybody do when the lotto's like a lot of money, right? It takes time, and it builds up and it builds up and it builds up, and eventually it's like $1 billion. Well, that's what's happening in here. People are adding buys, they're adding sells, they're adding buys, they're adding sells, they're adding buy, and all of a sudden there's a ton of money in this little box. It's a ton of liquidity, right, inside this box, and it's going to break, right? It's going to blow, and when it does, you're going to have a nice move in one direction or another. And so right here, we had that nice little box. So it was showing us that there was that reversal coming, and we had a great clear top. And so when we do that, we can draw the fibs, right? So we got a nice fib here, and the fib dropped down, and we got a 38.2. And so when we did that, we could be like, okay, what do we have? Well, number one is we got the Fibonacci. We know the trend is up, so I'm just building my case, right? My confluence. We've got a nice trend. We've got a fib level. It hit the 30 and it 38.2, but it held, right? So step two is it's holding the level, right? Do we have a resistance point as well? Is there resistance in here? Well, you know what? Over here was a zone. You can see, look at all the choppiness over here. Support level, support level, support level. And now it's hitting that. So we have another zone, another support and resistance zone. And then what do we have? We've got a candlestick pattern, right? And so right here, if you were fib trading, if I, Casey Stubbs, was fib trading, then I would absolutely 100% be like, yes, this is a good setup because we have the trend, because we hit the level, because right here we have a candlestick pattern, right? And remember I talked about trend walls, right? Well, let's take a look at this. You've got a trend wall and it's above the trend, right? So it had broken out and it broke above this trend wall. And sometimes it didn't quite go all the way, but sometimes it'll retest this. But at least I'm like, okay, I'm above the trend. Okay. We broke back above this moving average, which, you know what? It's good to be breaking up above moving averages. We got the volume. We got a lot of things working in our favor. And so you're able to definitely build a case in direction of your trend. And my entry, had I been trading this, would have been right here. Right? I buy it right here at around 548, and my stop loss would be below these levels, which would be probably around 540 540. I can get a cursor and figure it out. 540 stop loss. 537, it would have been my stop loss. So we're looking at 549 would be the entry with the stop at 537. So about a $12 entry stop loss, right? Again, you're not putting a lot of risk. And if you put in, this is the other thing you got to remember about trading, that risk to reward ratio. If you're using fibs and you're managing your risk well, it's very easy to risk $12 on a trade. And it all depends on how many shares you have, right? So if you're risking 12 and you own one share, that's $12 of risk, right? One share, you're risking $12. If you have 10 shares, that's risking 120. Okay, so let's just say that you're risking $120 on this trade. Well, the profit side, if you make a $12 profit, where would that take us? Well, let's take a look. From 149 up to 159 is $10. Up to 12 is right here at the all-time highs, right? So you're right at a 1-to-1, 1-to-1 risk to reward ratio. Okay, that's pretty awesome, right? That's pretty good. So you want to get a 1-to-1, and it's actually quite doable. I'm not going to say that it's easy, but it's definitely quite doable that when you're working in a strong trend to be able to hold out for higher risk to reward ratios. Because if you do that, if you can get a 1-to-1, if this could come up to 583 and then all of a sudden you're much better, you got $12, you know, if we get in right here at 49, okay, and we ride it up to, let's just make it easy, 79, right? We go from 49 to 79. That is a really good profit. That's $30, okay? And it's doable, $30 while risking 12. So if you do that and you can win 50% of your trades, and if you're finding high quality entries that have multiple confirmation points, then you can definitely do that, right? You can definitely do that, okay? Very, 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 very good. Now, let's go here. Let's see. So, yeah, let me see what my next slide is because I've only got 5 minutes left. Okay. Wait for confirmation. So again, when I say wait for confirmation, that's kind of what I'm talking about, is having multiple things in your wheelhouse, right? Trend line resistance, support level. Make sure that you're not in until you get that candlestick pattern, right? That's the confirmation that I'm looking for. I need that confirmation. Now, I know other traders will take the trade as soon as it hits the 38, right? Okay, it hits the 38, I'm taking the trade. And what I'm going to say about that is, I'm not going to say that it doesn't work, but I'm going to say whatever method that you use, make sure that you're testing it. I have found that most of the people, and this is not a critical, I'm not being critical at all, but I found that most of the people are not willing to do the research. Like, I could say something like, hey, when it hits the 38, buy. Or when it hits the 38, wait for a candle confirmation. Which one works better? Well, I could ask somebody that and say, take 10 trades where you're waiting, and take 10 trades where you wait for confirmation. Take 10 trades when you just go right in. Well, people can't tell me the difference because no one's willing to do the homework and to take the 10 trades and to record the results. The reason you jump from strategy to strategy is because you're not willing to do the homework to find out if your strategy is even working. You don't even know. You just know that you're not making money. That's all you know. You don't know why. You don't know if waiting for the 38.2, waiting for the candlestick is better. And now look, if I'm talking to you, if you're like, wow, that's me, then do something about it. You know, make a change, do something about it. Be willing to do what it takes to live the life that you want to live, because I guarantee you, if you do this, your life will change. But I don't know why. I think it's a mindset thing. We just don't want to do it. We just our roadblocks are in our mind. And I know that there is a lot of roadblocks because we don't believe that we're going to be successful. We don't believe that the presenter's telling us the truth. We don't believe that that this could be us, or we don't believe that we deserve it. You know, I made a lot of mistakes and I'm a bad person, and, you know, whatever. It's what, you know, you live the way you live because of what you believe. And I believe that I'm going to do the work and I'm going to make the changes necessary. I'm always working on me. I'm always making me better. And I'm so glad that I've gone through a lot of crap in my life and not given up, because that's ready to go. Okay. So with that being said, what's the last point? Set targets and a stop loss. Okay. And I'm running out of time. Don't worry, I'll do this quick. So you want to set targets. I already showed you how to set a stop. Just go below the level and the candlestick pattern. And as far as targets, just set it for a 1-to-1 or a 2-to-1. You can use fib extensions to come up with targets. Those are really nice, where, you know, it'll be like the up here, but just keep it simple. Do a 1-to-1 or a 2-to-1, and you can also trail the stop, right? You can trail the stop, and if you do that, you're going to be fine. And the other big thing that you want to make sure that you're keeping track of is do proper money management. Do not risk too much and let your emotions take control, right? The emotional side of things can really wipe you out, and it can just be crazy. Okay. Now, with that being said, if you want to check me out, I have a Telegram channel, and and I was supposed to give that link to Dave, and I think I forgot. Dave, I'm sorry. You can
Okay,
shoot
no
me.
problem.
You can shoot me.
Oh,
But yeah, I put out a lot of trading advice and stuff. It's a Telegram channel. And it's kind of a good thing. So the other thing I wanted to mention, if Dave would allow, is I did come out with a book, and a lot of the stuff I talk about was in the book. You can check it out right here. It's called The Complete Trading System. And my reviews are not bad. Okay, they're not bad. Let's see. This guy said, this guy, Taylor, thanks, T. He said, it's just what I needed, results. Just what I needed. I saw results instantly. So if you're interested, you can check that out. Cheap, cheap, cheap training, right? You can buy a trading system for $2,000, or you could buy my book for whatever, $20. And a lot of the stuff I talk about, I almost, you probably don't need it though, because I almost gave you my entire book in this presentation. So that's it. Oh, you know what? Somebody asked for the link. Let me throw it out there, if Dave would allow for that. And I'm going to throw
sure.
the Telegram link too.
Yeah, I posted the Telegram.
Oh, okay. Thank you. Yeah. Oh, wait,
Oh,
I posted the wrong people.
I'll fix it. There you go.
Okay. All right. All right. Well, Dave, I really appreciate it. You know what? You're doing such a good job.
Oh, thank you. I like your drawing idea too. I need to have like we can at the end we vote on best drawing, best
Best
slides,
presenter
best
yeah.
charts, that sort of thing.
I'm
Yeah,
just
well,
teasing. I was just teasing. My drawings were terrible. If you looked at those drawings, you would not know what that was. So, yeah, well,
well,
thank you. You're doing a great job. You're really providing a good foundation of education for people. So keep up the
well,
good
thank you.
work.
Thank you. And thank you for being here. And yeah, people are people keep showing up, so I'll keep doing it. So
You got it. They're getting bigger, man. You're
yeah,
doing good.
yeah.
I'm really,
We've had a
really
great crowd for
impressed.
this one.
I'm really impressed.
All right. So anything else you want to add?
No, I'm done.
All right. Well,
If somebody wants to ask a question, I think I might have
um,
1 minute. Otherwise, get a
I,
drink
I
of water.
I just subscribed to your Telegram too. I guess I wasn't on there. I'm on your, the Golden Glitch one, but I subscribed to your Telegram too now. So
Awesome. Thank you.
so all
I
right.
don't talk about options in my book. Not too much. It's not an options book. It's more of a price action, how to enter into the trade at the right time. And it talks a lot about mindset because as you can see from my talk, I love talking about psychology and mindset because you're not going to be successful if you're not going to do the work, and you're not going to be successful if you don't believe the right things. If you believe a lie, you will never be successful. Thanks,
All right.
Dustin.
That's a great note to end on. So I'll cut you off there, and
All
uh,
right. Have a good one.